Good day, this is your European Open briefing for Tuesday, June 14th. My name is Michael Florentiades. I'm the Chief Economist here at xm.com. The key points today: Brexit concerns are causing volatility in the absence of other major market drivers, it should be said. So Brexit monopolizing attention while no developments are expected from major central banks, etc. The yen is strong. It is stronger despite a warning from Japan's Minister of Finance. We have a persistent risk of sentiment, but it's more a kind of concern rather than panic or major moves right now in stock markets. We do have some losses, but I would like to say that they are contained more or less. However, we do have the German 10-year bond yield going negative for the first time in history this morning, so that's a big development. The Japanese bond is also hitting a new record low negative yield, so that's important to keep in mind. In terms of calendar, we have UK inflation statistics, Eurozone industrial production, US retail sales, and of course the Fed's two-day meeting begins today in Washington. Now, why do we see concerns about Brexit resurfacing? Well, the probability of remaining in the EU has fallen to around 60%, from between 70 to 80% as soon as a few weeks ago. This is according to the odds offered by bookmakers in the UK. And lacking a better indicator, the odds given by bookmakers are taken as a reliable one of the indicators that the market uses to judge the risk of a Brexit. And as we can see here, in the last 10 months or so, we are seeing a rebound, a substantial rebound in the Leave campaign's share of the vote, and now they are like evenly split. However, there have been severe problems with polls in the UK. They were not so reliable in the Scottish referendum and in the general election, two recent important polls, so this should be kept in mind. The pound, of course, is facing a lot of selling in the face of these news. We have cable hitting a low yesterday at 140, 114. Despite some negative news from polls, more polls showing the Leave campaign ahead, sterling cable at least has managed to hold that yesterday's low. We shall see. The momentum probably favors additional sterling weaknesses, and we'll probably see 140 being tested before too soon if the trickle of news in showing that Leave campaign is gaining, then we should see, and possibly we're going to see sterling below 140. I think that could make the risk return profile for sterling more balanced. Previously there was more downside risk from the levels, but very limited upside risk. So now as sterling falls, it would make the currency more of a two-way bet according to what the referendum does, and sterling should move accordingly, whereas before it was much more unbalanced. On to dollar yen, exciting developments there as well. We see the yen strengthening towards the 105.55, which is an 18-month low. So the yen has strengthened and ignored Taro Aso's warning that he would firmly respond if rapid and speculative moves persisted in the yen. However, it's difficult for the yen to shake off its safe haven image because Japan is a net creditor, so it doesn't rely on other countries for funding, and this is making the yen safer currency, despite QE, the problems that Japanese economy has in fast growth, etc. Yeah, the developments in the bond markets, they are quite important because we have seen both the German and the Japanese 10-year yields at all-time record lows. So we have seen, as I said, the German 10-year going negative for the first time in history, and the Japanese 10-year trading at minus 0.17.5%. Now, this doesn't represent just risk aversion, it's just part of the story. Risk aversion makes people go into safe havens such as government bonds, and this depresses their yields, but it also represents monetary policies, the QE policies that both the ECB and the Bank of Japan are pursuing. So it should be kept in mind. Yes, maybe it does show some concern, but it doesn't. We have to also take into consideration the monetary policy. On to the calendar. We had Japan's industrial output revised a bit higher, and we also had National Australia Bank's business confidence survey and business conditions. It was a little mixed, no big surprises, roughly in line with last month's readings. We have Spain still in deflation, and we had slightly lower than expected inflation in Sweden. Moving on, important news today is UK inflation, although it's not expected to move markets given the intense focus on the referendum. And we will have the Eurozone industrial production for April, so it's a bit old, this number. It's expected at 0.8% month on month. Finally, we have at the start of the US session, retail sales, very important. Headline and control are both expected at 0.3% month on month. That will be a slowdown from the previous month's very high and unsustainable 1.3% gain on the headline level. I think retail sales will be important because they won't sway the Fed, of course, which is going into the two-day meeting today, but they could allay concerns that the consumer is having problems because jobs are not so available after the poor jobs report for May. So I think retail sales will be very important. They will also have an important weight for GDP, so we'll be keenly watching that. American Petroleum Institute oil inventories will also be watched after the market close. That's all from me today. Thank you very much for watching, and have a great day.